Hey, what's up, guys? Let me know when you can hear me. We can get going. Sounds good. Let me upload a script real quick, and we can get going. Cool. The first thing I want to point out really quick is, sorry, let me check the Discord message. All right, cool. So web app, we pushed a refresh of the web app last night. Biggest things are, right, we've added net charm, net gamma, or sorry, we've added net vana and net charm as columns you can have now. So, right, we used to just have the net stat 3D surface models, but now, right, we have those visible by strike, right? So we can kind of influence in aggregate, what the, kind of dominant charm forces are, and then where those key sensitivity points for each of those greets are. We're going to be working to get, right, net stat incorporated into the web app here, but for now, that's what we've done. A couple other things, right? You can change the position, you can change the sizing, change the position of your headers, all that stuff, sticky state, all that good stuff. So hopefully it just leads to a better viewing experience, right? We got the expected move here. We got the Gex transition zone, and we're going to be working on getting the Dex transition, drunken sailor range in there. But those algos are a bit more technical. And then landscape view, right? You have all the different, you have Dex, you have Vana, you have Charm, you have Net OI, you have all that stuff there as well. So with that, we can get into the pre-market prep. Sorry, let me check that message to make sure. Oh, all right, cool. All right, so starting out pre-market prep, starting with market trend model, just understanding kind of, buying and selling happening under the hood. Good thing about market trend model is it's based off the tick index. If you don't know what that is, you can just go look on Investopedia real quick. They have a good article. Right, but we create a time series out of it to understand long-term, medium-term, and short-term time frames. Yesterday, fairly flat consolidation day, more or less. We are above the rainbow ribbon, so that's a good sign. That's kind of a longer-term signal. We want to keep that maintained. That's a key signal for our two mechanical strategies. So long as the cumulative tick, which is the bolded white line, stays above the cyan line, then, or really the rainbow ribbon in general, then those strategies will be continuing to look for long entries. The thing in the short term we want to see is if the cumulative tick starts to lose the railroad tracks with the short-term white moving average ribbon, that's generally a good kind of take partial profits on this recent move higher. Historically, that's been a good signal, so I want to be cognizant of that. Reason I bring that up is because you can see the pattern of cumulative tick above the railroad tracks is started last week on the 24th. So we're, kind of 1, 2, 3, 4, 5, like 5 or 6 days into that signal. That signal is generally good for 3 to 5 days, kind of a short-term momentum burst. So we're getting a little bit long in the tooth there. So just something to be cognizant of. Yeah, and so far this morning, right, we're starting to see a breach of that a little bit. So, in the short term, if you're bullish, you do not want to see this maintain. Seeing a little bit of filter tick selling coming in. So just something to be cognizant of. here, which kind of leads us into the next point. Looking at structure, right? We're above top 67.85 is kind of the key zone for the monthly expiration, the SPX complex. Want to maintain that. However, things that we're noticing going under the hood is, looking at the GEX ratio, looking at the true gamma, true delta zeros. Structure is not necessarily improving under the hood, right? Like the GEX ratio as an example, declined yesterday. I mean, price, kind of sold off yesterday intraday, so that's fine. But price is kind of getting back to highs, but GEX ratio is nowhere near those highs. Sorry, excuse me. So, something to be cognizant of there. Looking at the true delta, 2 gamma zeros, like, yes, we're above all of them, but they're kind of flat to declining. So, as a saying here, not necessarily actionable per se, but just helping with your situational awareness. And, it doesn't mean we necessarily have to collapse, but it doesn't mean that we're just going to go to the moon either. So, your antenna should be up, should be alert, not getting complacent here. It's going to be important. Let's see. Yeah, so the overall, SPXA, that's going to be supportive in terms of charm flows. Thing to note here is Vana could work against us. And by that, it means, right, get the volatility spikes, seeing alimony puts coming in via SPXA, and, could result in kind of a rapid rush of negative deltas into the structure. So something that we just want to be cognizant of here, right? And this is the net stack command, a summary of our 3D surface models. So this just helps us identify what those key sensitivity points are. So key kind of peaks in the mountain, if you think about a 3D surface model, and then kind of in aggregate what's happening above and below spot price. So the integral on delta, that's just the sum of all the deltas below spot price, the sum of all the deltas above spot price. So if we go to just help you visualize this, so above spot price is going to be all of these deltas, below spot price is going to be all of these deltas. Same with gamma, same with charm. So that's how we do that. What else were we doing? So looking at SPSP, the speedboat, transition zone, 68.40, top of that transition zone. So that's key level we want to work at. We want to get above. And then 68.50, which we're going to see confluence with the 0DT level. Ton of confluence there, very important level in terms of all the various Greeks that we look at. So we want to see that hold as well. Then to the downside, obviously 6,800. That's going to be the bottom of the drunken sailor zone for 0DT range. And then, key psychological level, Livermore level, a lot of positioning when looking at the distribution there as well too. Then below 67.85, that's the bottom of the transition zone here, which is the top of the transition zone SPXA complex. So a lot of confluence with those levels as well. Just going through true zeros, right? Looking at GEX ratio, kind of same sentiment there, despite, the huge kind of reflexive bounce in spot price, which kind of feels like it is just that because structure is not really improving, or spot price as well outpaced the structure itself. So again, just being cognizant there, having your antennas up, not getting complacent. Looking at SPX 0DT, right? So drunken sailor range, 6850, 6800. I've kind of highlighted those for us, the green and the red. Let me know if you guys like that. Kind of helps it stand out for me visually. That's really that's based off of the plus and minus GEX. Yeah, I'll do that now. I'll do that in a second, Tom, when I get to the swing trading. Thought I did, but yeah. All right. So those are kind of the key goalposts, right? And then the game plan is, right, we have GEX transition from 6820, 6825. So if you're feeling aggressive, right, then, we'd be going, long above that transition zone up to the top of the drunken sailor range, and then or to the downside, short below GEX transition down to 6,800 bottom of there. And then really from these two points in the structure, it's really going to depend on intraday volume, right? If we're trending higher, do we see the volume command, right, progress higher, market trend model progressing higher, suggesting that there is meaningful speculation helping to drive us higher throughout the session, right? But, within this zone, you should be expecting choppy price action. So if you're trading within here, then kind of let that be your warning. Hence kind of why we have the two different paths here. This path is more conservative path where we're expecting chop and a break free or break down. And then here is where you're wanting to trade kind of above the GEX transition zone. Going to net stat again, just looking at our key sensitivity points in the structure for all the various Greeks. We can see 6,800 to the downside. We know that's the bottom of our drunken tether range. 6,850, 6,900, those are going to be the key levels to the upside, right? 6,850 obviously is the first one. Charm right now is a headwind, but again, if we get above 6,850, that's likely to flip that to be more supportive, right? And then Vena is actually a bit of a tailwind today, assuming that we get money call speculation and a reduction in volatility, right? Vena on its own isn't really going to have an influence like Charm, right? Time is always ticking. Volatility could be constant, for example. So we really need to see that money call speculation, or vice versa to the downside. That money put speculation is really going to ramp volatility. So that is what we have for 0DT stuff. One thing to know, which I said, no, we'll get to swing in a second, right? If you go to Game Edge US free courses, go to the Game Edge Fast Pass. If you're new to Game Edge, new to options market structure, all that good stuff. Our Fast Pass is our education portal, right? Everything a paid member gets. You get lessons on the tools, kind of the methodology, our strategies, frameworks, all that good stuff for free. So you can just sign up for it there and have fun. It's going to take a little bit of work, right? It's kind of a niche. These concepts are kind of new to a lot of people, but we have a community of people that attest that it's worth learning. So it's going to take a little bit of time. It's not a quick win path by any means, but given kind of the evolution of markets and the importance of options markets to day-to-day price action, worth your while to go through it, or maybe not, but there's a free resource for you if you like it. Tom wanted the dashboard in here, so we can upload that real quick. All right, now going into the 0DT or in the swing trading time frame, right? So again, all starts with an SPX game plan. Understand what the overall environment is. Looking at SPX right now, trading above the top of the transition zone. So we really want to see 68.50 break free. Then we want to see, an improvement in the market trend model. But, right now, kind of thought here is tightening up the time frames a little bit. And above, 68.50, things look fine. Go through some of the scatter plots. Oh, excuse me. So this is just a good way of understanding kind of what stocks in the market you kind of want to be paying attention to. So what this is call dominated stocks. Above P-Trans, but below plus X. And so I kind of have this box here because this is good risk to reward trades, meaning, little downside to P-Trans and a lot of upside to plus X. So like SMH is an example, over 9% upside to plus X, and downside is roughly 1% to P-Trans, right? P-Trans is our key upside acceleration zone. Plus X is our key kind of profit target to the upside where we expect monetization to take place. So that's the way that we read this, right? SMH, Crowd, NEE, that's oil energy company. I forget what it's called. UNG, ETF, Wells Fargo, UPS, Walmart, BAC. Yeah, something you can kind of understand here too is just kind of like understanding what kind of stocks are in this zone. Like, are they, stocks that really propel the next, leg higher in the market, defensive names, that kind of stuff. So we want to be cognizant of that as well. Then all these names over here are below P-Trans. So, these are good names to understand, okay, do we break through P-Trans? Then we could have an acceleration up to plus X. So all that to say, this is just a way to help you whittle down your watch list, right? Because there's thousands of stocks. So if you can whittle it down to 5 to 10 high quality candidates, then that's probably worth it. These are all above the 21 and 50 EMA as well. So kind of strong institutional momentum, above key upside acceleration zone. So probably worth having on your watch list. Same thing to the downside. These are put dominated stocks, so names that really shouldn't be on your watch list to the upside. So I just want to bring that to your attention. This is the core scatter plot. These are just the names I have on the core list in the population. If you think there's names that should be added to this list, let me know. But it's really just kind of your Mag 7 names, and then some larger names driving other parts of the market like XOM, JPM, Lilly, Visa, Costco, all that good stuff. just so we can kind of understand, okay, a lot of those names are above P-trans. So in general for the market, that's a good thing if those core stocks are above P-trans. So yeah, so I'm going to pay attention to. Then ride just kind of discretionary basis from there, like Meta. Obviously, right from like a price action point of view, got hammered, starting to consolidate a little bit above P-trans. So, that looks fine, but like it's below the 50 days. So if that's meaningful to you, then probably shouldn't be looking at this stock. But, purely from kind of an options positioning point of view, it looks fine here. So yeah, just an example there. Then lastly, we have the sector scatter plot. So these are all the sectors, right? Just kind of understand what sectors are above P-trans and all that good stuff. So with that, that's kind of all I got for you guys. If there's individual names you want to go through, we can do that. Any questions on 0DT stuff, we can go through that. Any questions on the fast pass, any questions on the new dashboard update, happy to go through that. We got a lot more updates coming. We got a new, front-end developer who's really good. Had to get rid of the last one. So yeah, we're excited about the progress that we're going to be making here. CEG. CEG. I feel like this is an oil name. What is it? CEG. Yeah, Constellation Energy. That's right. I mean, this one looks great, right? Above P-trans. Plus Gex at 370. Going over here. Oh. Yeah, so 370, want to see us, maintain, get above that level. Above that level, I mean, it's got runway up to 400. So why can't it keep going? Thing to note, open interest of only 170,000 contracts. So that's relatively small in kind of the realm of, what we deal with. Generally, stocks we're looking at with our tools is, 500 million, something like that. So just keep that in mind. But still, this is a good goalpost, kind of, layering on where key levels could be along with TA if that's what you're doing there. Yeah, thin stock, exactly, Tom, you're right. Yeah, January OI, I think that's when all the leaps expire and all that good stuff. So that makes sense. Or no, it'd be January. What, January 16th probably expiration? That's the monthly expiration, if I were to guess. Oh yeah, the 16th. That's where 33% of the gamma is. So yeah, I mean, it's still just 75,000 contracts, so not a ton. So let's go through this. Like NVIDIA, nice gap up today, above P-trans. Tesla, nice recovery. Palantir. Let's go through here. So looking at SPX, right, failing to get above prior day high. I like using these prior day high, pre-market high, and then prior day low, pre-market low is kind of just, key, and the opening print as well is kind of just key kind of levels in the market, along with the, options market levels that we like to analyze as well. So we rejected right at 68.43. So, close enough to 68.50, right? We're still not through 68.50 yet, so we want to maintain that. However, we're maintaining the top of the DEX and GEX transition zones at 68.35. So that's where I said you can get long above the DEX transition zone, but expect chop so long as we are below 68.50. So just be cognizant of that. NASDAQ, this is ripping above pre-market high, above prior day high. That looks good. IWM, doesn't look very good on an intraday basis, right? Below opening print, below prior day high, pre-market high. So not there, but if we see a rip higher, that would obviously be probably constructive for the market in general. IWMY, I don't know. It seems to always lag. I don't know, probably the composition of what makes up the IWM too, if I were to guess. I forget what Well, for one, IWM is equal weighted, right? So it doesn't have the benefit of the massive stocks just pulling it higher. Two, I think the sectors, I don't know, feel like IWM is weighted like, financials and some other stuff, but I could be making that up too. So don't hold me to it, right? I just stare at 1 second ticks on the SPX chart. I don't know anything about the market. That was a joke, by the way. Yeah, I like looking at this too. It's kind of from an overall sense. So Apple, right? We're above all those key levels. Tesla above, Nvidia above, Microsoft flirting with prior day high, Palantir ripping, Meta not above any. So right, from a day trading point of view, like this helps me quickly filter out like what stocks you want to be long versus short versus like ignoring. So like obviously, all these names up here just coincidentally are, above those key levels. So, more attracted to the long side. And then obviously all these names down here kind of, aside from Palantir, kind of dead to me until they can work above these key levels. So with that, actually, so it's my birthday today. My mom just came over, so I'm going to cut the stream there. I will try to get back on later today, but 22 minutes. We went through the whole game plan, so hopefully y'all got some good info out of this, and we'll talk to you guys later. So thank you very much.